For the past 40 years, the global economic landscape has been shaped by technological advancements driven by well-funded companies, primarily in Europe and the United States. These technological breakthroughs were then transformed into commercially viable products that were manufactured in regions with lower labor costs, notably in China. These products flooded global markets, making affordable goods accessible to consumers worldwide. The West held high-tech jobs for designing, marketing, and manufacturing these products, while countries offering low-cost labor were able to develop their own industries, enhance their infrastructure, and improve living standards. In theory, this was a win-win for everyone involved. However, even if the parties had managed to maintain friendly relations, spoiler alert, they didn't, low-cost export centers began pushing for higher-value roles. And this is exactly what has happened. Over the years, China has outpaced the West in certain manufacturing sectors, and it's no longer limited to the production of disposable consumer goods. While China still produces a significant portion of inexpensive plastic products found on platforms like Alibaba or Wish, this should not overshadow the fact that China has become a dominant force in some of the world's most important industries. And it has achieved this at an astonishing pace that is now catching many economists by surprise. This transformation is occurring amid China's worst economic conditions in decades. So the question now for China is this economic shift a lifeline that can revive its economy, or is it too little too late? On the other hand, Western governments and companies are now faced with a new set of challenges. What steps will they take, regardless of China's economic trajectory? Has Chinese manufacturing truly become a global leader in its own right? Can China continue to thrive even if Western companies pull their operations out of the country? Finally, will trade restrictions and tariffs be sufficient to curb the rising influence of Chinese industries? To answer these questions, we need to first look back at the history of China's rapid industrialization. The turning point came in 1978 with the introduction of the Foreign Equity Joint Venture Law, which allowed more foreign capital to enter China. By the mid-1980s, China had begun its explosive growth, rapidly emerging as one of the world's largest export competitors. Today, China is not only a manufacturing hub, but the manufacturing powerhouse on the global stage, dominating industries ranging from electronics to pharmaceuticals, from automotive parts to renewable energy technology. Before China's rise, something as simple as a toaster was a major purchase that people would carefully shop for. Yet, as Chinese manufacturing expanded its reach, it made consumer goods more affordable and accessible to millions of people worldwide. Items that were once considered luxury purchases, such as electronic gadgets, household appliances, and even clothing, became attainable for broader demographics. For decades, the Made in China label was associated with poor quality and low durability. However, this perception began to change as China's manufacturers improved their production processes and quality control, proving that affordability didn't have to come at the expense of quality. So has China really become a leader in manufacturing, both in terms of quality and quantity? The answer is multifaceted. While China continues to dominate the production of cheap consumer goods available on online marketplaces like Amazon or Alibaba, it is also beginning to shift its focus to more sophisticated, high-tech products. The International Labor Organization's findings show that Chinese labor costs are still significantly lower than those in the U.S., 20–40% lower on average. While advanced manufacturing, such as aircraft production, remains a stronghold of Western countries due to the highly specialized skills required, China is rapidly closing the gap and is now producing high-tech goods that rival those from the West, often at a lower price point. The key factor in China's manufacturing success lies in the country's ability to maintain trust with international buyers. Historically, many international consumers were wary of flying in an aircraft manufactured in China. But over the past few years, companies like COMAC, Commercial Aircraft Corporation of China, have made great strides in improving the reputation of Chinese-made aircraft. News reports indicate that even international customers are beginning to show interest in Chinese-made planes. The truth is that for decades, China relied on outsourcing and intellectual property theft to establish itself as a global manufacturing hub. The country's ability to reverse engineer products and build upon foreign designs was instrumental in its rise. But today, Chinese companies are beginning to innovate on their own, which has changed the global perception of Chinese-made products. Can China continue to thrive if Western companies pull out of the country? The answer lies in China's growing ability to move up the value chain. The country is no longer just about low-cost manufacturing. It's involved in the design, research and development, R&D, marketing, and management of products. China is now producing its own brands that compete directly with Western companies like Huawei in telecommunications or BYD in electric vehicles. These Chinese companies have not only captured local markets, but have also expanded internationally, challenging Western firms on their home turf. One of the most significant industries to watch is China's rapidly growing electric vehicle, EV sector. China is now home to the world's largest EV manufacturer, BYD, which has surpassed Tesla in terms of vehicle sales in markets like Australia. This marks a turning point for China, as the country has traditionally been a consumer of Western-made vehicles. However, with a strong push toward EV adoption and heavy investments in sustainable technologies, China is now leading the global automotive revolution. Yet, despite these advancements, China's growth story is far from perfect. Much of the country's economic expansion over the past few decades has been driven by speculative housing investments. Real estate became the focal point of China's economic boom, with enormous property developments springing up across the country. However, this housing bubble has burst, leading to a slowdown in economic growth. Youth unemployment is also a major concern, with many young Chinese citizens struggling to find stable employment in an economy that is increasingly automated and reliant on technology. Despite these challenges, China's manufacturing model is still effective, largely due to the country's massive trade surplus. In June 2024, China reported a trade surplus of approximately $99 billion, a figure that is helping offset the negative effects of the real estate collapse. However, this surplus has also caused tensions with other countries, particularly the United States and the European Union. Many governments have raised concerns over the dominance of Chinese manufacturing in global markets, prompting calls for stricter trade regulations and tariffs. In response, the European Union has recently implemented anti-dumping measures to limit China's influence in certain sectors, such as solar panels. However, the impact of these measures has been limited as China continues to expand its export footprint in other regions, including Africa and the Middle East. As other nations like Saudi Arabia, South Africa, and India emerge as major trading partners, China's economic resilience is becoming more evident. Ultimately, the global response to China's rise will hinge on whether consumers are willing to embrace more affordable goods, even if they come from a country with a mixed human rights record. If China can continue to address its internal challenges, including its real estate crisis and youth unemployment, it may not only overcome its current economic woes, but also emerge as an even more powerful force in the global economy. Conclusion: China's manufacturing dominance is not just a passing trend. It's a shift in the global economic order that will have long-lasting consequences for industries, consumers, and governments around the world. Whether or not Western companies and governments can adjust to this new reality will determine the future of global trade for decades to come.